welcome to another edition of 18 Minutes with 180 Markets. Vertical stacking. Well, what is vertical stacking and how does it help us as investors make money? Well, what I mean by vertical stacking is taking advantage of your competitive position. And one of those ways to take advantage is not just through your location, but also through a process that you may have that's unique and also a resource that you have that is very unique. And that's why I'm thrilled today to be joined by Paul Locke, Managing Director and Chairman of Pan Asian Metals, because Pan Asian not only has a big natural lithium resource, but it also has the potential for processing of that, which it really makes it vertically integrated. And finally, it's located in one of the largest population centers in the world, being Asia, and for sure the fastest growing population source, which again gives us those favorable demographics and a vertical stacking. And here to talk all about it, Paul, welcome.
Thanks, Greg. Great intro, and really happy to be here. Thank you.
Great. Hey, Paul, everybody's got a story and people back people. In just a couple minutes, can you tell us a little bit about your background?
Yep, I can. I actually started at Rothschild. I was a commodity or derivatives trader. I traded junk bonds and derivatives. Then I was at Commonwealth Bank in their project finance group, where I cut my teeth in minerals, the resource sector, and did a lot of work in funding mines. And ultimately, I ended up in Myanmar about 10 years ago. And the reason I was there is Myanmar was opening up, and I managed to secure a deal for exclusive use of Ivanhoe's exploration database from their work in Myanmar. So I spent several years with my head geologist or chief geologist, David Hobby, combing Myanmar. And through that experience, we expanded into Southeast Asia, and here we are. So we've got experience in just about every country in Southeast Asia.
Wow, that's incredible background. And I do have to ask you some follow-ups about that, Paul. Firstly, did you happen to overlap with Robert Friedlander?
Robert Friedland in Myanmar?
Yes.
No, I came in when they'd sold their Moniwa mine, but I'm very good friends with a lot of his key people, people like Bill Hayden, who discovered Platte Reef in Africa.
Right. And having that network, may I ask, how valuable is it being up there in Asia?
It's always important to have good people around you and people that you can reach out to ask questions, regardless of where you are. So I don't believe anyone can really ever deliver a project, unless you've done it many, many times, on their patent alone. So for instance, if I'm looking at geology, looking at a political environment, just about anywhere, I can reach out to someone and ask them about it. So that network of people we've worked with, friends, is really important in how we proceed on project opportunities.
Right. And also your background, as you said, you were at Rothschild, you were at CBA in their project finance area. Do you also believe that that gave you the experience and the lens to look at the world, not just through the explorer lens, if you will, but also really how does a project go from literally nothing to eventually making a profit?
Absolutely, Greg. In fact, David Hobby is an economic geologist, and I'm a project financier by background, and I've got a lot of experience in that side of things. Whenever we look at a project, and it's hard to tell, but we do preliminary work before we even mention it to anyone. And part of that assessment is, do we think it's doable? And doability comes down to, what are we seeing on the ground? You know, the grades might be good, etc. But also, what's the environment like? Where are we located geographically? Where are our markets? So our whole business philosophy is about doability and also proximity. We want to be close to infrastructure, close to ports, and preferably close to our end markets. That's not always possible, but there's sort of a trifecta of geology. I'll use that word maybe several times today. Geology, proximity, and markets.
Right. No, that's great. And it's great how you're so thoughtful about that. And now I guess going a little bit more specific to Pan Asian Metals, maybe start out with the business with your Ark Lithium project.
Okay, so Ark Lithium, we think is a really special project. Uh, it's an unusual project because it's the only lithium project in Southeast Asia. But what's great about Ark is that we're right in the middle of our market, and it's located in Thailand. Thailand is the biggest auto producer in Southeast Asia, the fourth largest in Asia, but also the Thai policy environment is set up so it retains that leadership position. And so there's a lot of policy around attracting EV manufacturers and battery manufacturers. And for what we're doing, it's perfect. In fact, the government introduced a mining policy to encourage exploration and development of critical minerals like lithium. So the Ark project is located just out of Phuket.
Right.
It's about 40 minutes drive. I get a lot of requests to go on site visits, but I'm not sure it's to go to site.
I'm sure.
It contains two prospects. One prospect has a JORC resource. It's a lepidolite style prospect, which I'll explain in a minute. But that
Please.
JORC resource is 10.4 million tonnes at 0.44% Li2O. And there's a mineral resource update. It's actually being finalised right now, so it's due very soon. And then 8 kilometres to the north is the BT prospect, and that's got a drill-supported exploration target. So there's a lot of drilling there, but not quite enough to take it through to resource. And that's 16 to 25 million tonnes at 0.4 to 0.7% Li2O. So combined, it's quite a sizable project, and we can stick the beneficiation plant somewhere in between. The objective is to ship a concentrate by barge up into Rayong, where there's a lot of industrial and chemical processing, and produce lithium carbonate there. On the grade, I might just add, Greg, when we look at projects, we don't just look at grade alone. It's
Right.
also metallurgy and cost environment. So on our grade, I mentioned 0.44, and I know many investors would go, but that's just way too low. We can all sort that and take it close to 1%. So that satisfies grade. But the other two factors are most important, metallurgy in particular. You can have the highest grade project in the world, but if your metallurgy is no good, it's worth nothing. And
Right.
then cost environment. You can have some of the best projects in the world, but if your cost environment's no good, the project's going to be marginal. So we tick all the boxes. We can all sort and upgrade. We've got the good metallurgy, so our results are very good so far, and we're in a very low-cost environment. Also, I might add that with the type of ore we've got, the Chinese manufacturers on the cost curve, we use a cost curve by McKinsey & Co., are near the bottom of the cost curve, and that's because of those three factors.
Right. And I think that being at the bottom of that cost curve is so important for investors, because doesn't that give you pricing protection?
That's all about and in that doability, we're looking for projects where there's a reasonable expectation that we can get into the bottom third of the cost curve. So no matter what commodity we're in, we're going to go through price cycles. Lithium's a bit lucky at the moment because there's so much growth and there's a bit of a buffer there. But when demand is satisfied, so concentrate demand is satisfied, then we'll start to porpoise around. And it's when the markets start to do that, that the high cost projects are the marginal projects, and you don't want to be there. It's like C-grade property. They're good sometimes, but not all the time. So you want A-grade property, and that's what we're aiming for.
Right. And in fact, it even more plays into your advantage, because inevitably those projects are the first ones to get shut down.
Exactly right. And the way I look at it, if your cost curve, I haven't got one here, but if the top of your cost curve, say, is, I would expect it's around $20,000 to produce lithium chemical and LCE for some of these projects after refining. If the market drops to $22,000, then your profitability is really marginal. And what happens is the upstream gets squeezed in tight markets. But if you're down at the bottom of a cost curve, and let's just say, let's be conservative, say your cost of $10,000 per ton, you're still making a big profit. So those projects are always really great projects to find and hold.
Right. Now, I certainly understand exactly where you're coming from right now. As far as timing, where are we in the life cycle of the project? Is this right that there's a PFS underway?
PFS is underway. We're aiming to deliver that later this year. So that work's been ongoing. And really with our updated mineral resource, that will allow us to produce a pit shell, and then a lot of things will just fall into place. So we've done a lot of work on beneficiation. Actually, that work is almost DFS level in parts. And once we've got our pit shell, we'll deliver the PFS. We're aiming for late this year. It could be in January. But the idea is a PFS at the southern prospect for RK. And then because the geology is pretty much the same, we can use a lot of that information in the northern prospect, the BT lithium prospect. And then the objective is to submit mining license applications late this year or early next year. And in Thailand, we don't need feasibility studies for that. We need just to show that what we're doing is environmentally workable. And it's up to us whether we want to lose money or not. That's the Thai government's perspective.
Okay.
And so we can submit our MLs before we've completed feasibility studies. And then we'll go through the mining license process, the application process. And during that process, we'll upgrade some parts of the PFS to a DFS. We don't need a full-blown PFS on absolutely everything. The other advantage we've got too, Greg, is our partners. Yeah. And they will help that application process, and also they're contributing to the PFS and so on.
Got it. Okay. Now, switching over, as I said, the Pan Asian is vertically integrated. Your RKK concentrate to CAM initiative, there are a lot of initials in there, but maybe explain it to people, please.
Okay. So Thailand is the concentrate to CAM initiative. So we're producing a concentrate at the project. We're going to ship that up into the industrial zones south of Bangkok, Rayong's one of them, and produce a lithium carbonate or lithium hydroxide. And then the stretch target, and this is where our partners come in, is at some point we use that and produce a cathode active material. Now, that will seem a stretch, and I've got to stress it's about options. We have the option to go there, not the obligation. And so in setting ourselves up with these options, we're at a huge advantage, because if we want to do it, we just push the button. And one of the advantages we have are our partners. So under MOU with IRPC, which is a large petrochemical company in Thailand, its parent with 45% is PTT, one of the largest oil and gas companies in Asia. And PTT wants to electrify. So PTT has entered into joint ventures with CATL, the world's largest battery manufacturer, Gotion, in the top 10 of battery manufacturers, and Foxconn, the maker of iPhones. Foxconn has also built an EV platform, and their joint venture is to build EVs in Thailand. So in that family of companies, we think our prospects of actually getting to CAM are very high.
Right. And it certainly makes sense. And as you said, I suppose when you're going for your DFS and so forth and so on, you can have these types of discussions. And again, maybe it goes back to your trading background that you like options.
I was an options trader.
Well, there you go. Now, you mentioned earlier the lepidolite product. Can you just give us an overview of that product?
Well, lepidolite is a mica-style form of lithium. So in essence, there are four key sources of lithium. We all know about brines, and I'm going to list them in order of grade. So brines, clays, which are big in North America. Then you've got your micas, lepidolite that we've got. That's what LPD's project is. And the Sinovac project by European Metals in Czechoslovakia, that's a mica. It's called zinwaldite. And then you've got your spodumenes and pedalites, and they're an aluminosilicate. And in fact, the grade sort of follows that order too. So your brines are typically from 200 ppm up to or 800 ppm for Galan's project, and over 1,000 for the Sala de Atacama projects. Your clays range from 1,000 ppm up to, say, 3,000 ppm elite. Your micas range from anywhere from 0.3 up to 0.8 percent Li2O, and your aluminosilicates range from 0.6 for petalite through to 1.6 for green bushes or so. But whenever you look at any project in any of those categories, there's good and bad projects.
Right.
And that's comes down to your metallurgy and your cost environment. So there's going to be some great brine projects, but they're super low grade. But the thing is, all your minerals in solution already, so you don't have to process it.
Right.
And there's going to be some great and average spodumene projects because of just various factors associated with that project. Lepidolite, to answer your question now directly, has several advantages. One is that lepidolite is commonly associated with tin and tantalum. So
Right.
in your beneficiation process to produce a concentrate, you get a tin and tantalum credit. And in fact, at our northern prospect, the BT prospect, we've got really high tin hits, like 0.2. In fact, we made it on the, there's a chart on Twitter with your top 10 tin hits, and we've made it into there. So I thought
Congrats.
it's funny. So you produce your concentrate with some credits, and then when you actually process that concentrate and produce an LCE, a lithium chemical, because of our environment, the quartz and the feldspar are usable minerals. And you might recall Piedmont's feasibility study actually had quartz and feldspar credits and market credits, by the way, but we actually ruin our markers because we're extracting the lithium. Also, in processing lepidolite, your roasting temperatures are lower. So that's one advantage. And with a spodumene, you have a higher temp roast and then a calcine. In lepidolite, you have a roast, that's it. And it's generally around 800 degrees Celsius, not in the above 1,000. So there's an advantage there.
Right. So there's all these little things, Paul. It does take a real attention to detail. And as you say, I keep coming back to the point of you are trying to deliver a truly economically viable project.
It's all about, yep, at the end of the day, it's just got to add up. Yeah. And you can't get away from it. So you can, I mean, we've all seen it. There are fakers out there, waving their rock chip grades and stuff like that. But the reality is, there's a lot of work into it, and you've got to be prepared to cut really early. If you're not seeing what you like, and it can hurt. So before we became listed, we're a private company, and we looked at several small projects in Asia, and we cut them because I know you could push them and pump them, but we know that they weren't doable. And what's the use of getting behind something that's not doable?
Right. And Paul, speaking about getting behind something, you are behind Pan Asian in a major way. Can you just tell us a little bit about your shareholdings?
Yeah, well, I'm the largest shareholder. Right now, it's around 27%. And the reason that is, when we started in Myanmar, I funded the whole project. So for several years, I funded geologists and our consulting work. And the idea was to get the company to a position where we had something which we thought was a reasonable thing to list. So if I be frank, when you list something that's pure exploration, moose pasture, you're going to get diluted. And there's a point where you go, well, what's the use? So the idea was to identify projects which we really believed in and bring those to market. And I think when we brought our project to market, we had drill holes in it. So we actually had some idea of what was going on.
Got it. And Paul, we have to unfortunately keep the interview short because I could spend all day here with you. In one or two sentences or 1 or 2 minutes, can you just tell us if there was an investor out there, what would you like him or her to know about Pan Asian?
All right. Well, I think there's several key points, Greg. One is when we look at Southeast Asia, that's our pathway to early cash flow. And unfortunately, we didn't get to talk about our South American brine projects here, which is one of the largest and most strategically located brine holdings in South America. But that's our pathway to future growth. So what we want to do in Asia is get to cash flow early and then follow through with our Tama Atacama project and build volume into our chemical offering.
Right. Certainly, there is a lot there. And again, I keep coming back to it sounds like you're really trying to run a proper business, getting that early cash flow, using that cash flow to be supportive of the future, really big prize hunting, but at the same time, mitigating risk.
That's it. Exactly. Spot on.
Right. Okay, Paul. Well, thank you very much. We'll certainly be in touch. And again, this is an incredibly exciting, vertically integrated story.
Thanks, Greg. I really appreciate the opportunity. Thank you very much.
Bye bye.